think anything that appears to be bulletproof as far as the therapeutic is concerned is going to change the entire arc, not only of how we deal with the virus, but certainly the conversation around the economy and the stock market. So one would have to assume that if this worked and took serious illness off the table, most people would then, again, maybe fall into some of the behavioral patterns we saw before this ever occurred. Absent that, we're still waiting, not only for, again, a bulletproof therapeutic or a vaccine down the road.
Larry, we had a historic slide in stock prices a month or so ago with hitting the low on the 23rd. But as you point out, over the past 16 days, it's been the strongest S&P since 1938. Can you believe it? Can you trust it?
So I would say that a lot of times the market overreacts to either the upside or the downside. And when we were down at those lows, I think it was overreacting to the downside. And we put out this roadmap of 4 things that could actually help get the markets back up to closer to 3,000. And you've seen at least 2 of them come in much bigger than what people even thought they could. And that is in the form of monetary stimulus. I think the Fed has been an unbelievable leader here, doing much more than what people expected. And then when you think about the stimulus coming from Washington, at one point they were talking about $1 trillion in stimulus. And now we're up to $2.2 trillion and likely going even higher. So both of those have mitigated the downside. As Ron said, if we do get some form of a therapeutic, that'll start to intensify the discussions of us reopening this economy. And that as well could take the markets higher. So as long as we get that therapeutic, I think we continue to move higher over the course of the next 12 months.
The therapeutic is one thing, Ron. The economy is quite another. And the numbers that have come out this week and presumably are going to continue in a trickle and a torrent over the coming weeks are likely to be numbers that we've never seen before. How much wind are those numbers likely to take? How much wind is it likely to take out of the sails of this market?
Well, I think it's really, Tyler, we are going to lurch number to number. And I think to the extent that any numbers come in worse than the worst possible estimate that we've seen thus far, whether it's the unemployment rate topping 20 or 25%, whether it's GDP contracting more than the worst estimate out there, which is currently 50%, then the market's going to have to rethink its current proposition. And earnings in the second quarter, which we have yet to really estimate in a meaningful sense, if they were to weaken considerably, you would ultimately have more headwinds for the financial market. So I think we know where we are roughly. We don't know if we're going to exceed our worst expectations. And then again, we don't know the pace at which we're going to recover quite yet. And again, there's a biologic problem that comes before the economic problem. To the extent that that gets solved at any period, at any point along the way, determines a lot of the both economic and market behavior. The one thing I would say, and that I'm keeping a really close eye on, is the price of oil, because if there is some sort of economic canary in the coal mine with, air travel down 97%, right, oil's telling us that a normalization is not an immediate term consideration.
Larry, let's say you have been pruning your portfolio, perhaps taking some losses on positions that you had, and now you want to redeploy some of that capital into either individual stocks or mutual funds, if that's your taste, as it is mine, or index funds. What is the prudent place to put money now? Do you chase the winners, the Netflixes, the Amazons, and the like, or do you look somewhere else?
So I think we're in a market right now where selectivity is absolutely critical, and not only by sector, but also intra-sector. But if I just look at the broad-based sectors, the 2 areas I continue to like are technology. And the reason for that is that I see the catalyst in front of us, and I think that's going to continue to be with 5G. And with all of us working at home, we've seen what we need. We need more power, more speed, more storage, more applications. So I think that that's a broad catalyst for the entire sector. If I look at that sector's fundamentals, that's one area that has the most cash on their balance sheets. So I think that that could actually buck the trend, and you could see some dividend increases, some buybacks, and then merger and acquisition activity. And then when you look at the diversification that you get within that sector, don't forget you not only get the traditional tech companies, but you also get some e-commerce and the payment processors. So I do like tech. And then the other area I like is healthcare. And I think one thing we got to keep in mind when we look at this economy is that the U.S. economy is not necessarily the U.S. equity market. And while we may focus on some things like restaurants and some of these other smaller parts, and department stores, they represent like 1% of the S&P 500. But then if I focus on healthcare, which is a very big part, that's actually reaping the benefits of what's going on here, because I don't think we'll ever see another situation where we'll be undersupplied when it comes to medical devices and supplies. So I do like healthcare going forward, and I think the visibility for their earnings is strong as well.
Right.